So let me help you plan out your next trade. What's going on, team? It's Ricky with TechBud Solutions here with a super quick video. And in this video, I wanted to talk about using the risk to reward calculator that, again, is free and available. It's an Excel sheet. I mean, you can literally create it yourself. And the whole point of this, we actually talked about this in our morning live stream. And it was talking about, like, I just wish a beginner, before they took the trade, they knew the dollar amount that they were putting at risk, how much money they were potentially able to make, and how much money they're potentially able to lose. Because at that point, if it's premeditated, if it's something that's planned out, and if it's something that, you give it time to kind of like understand, then you understand the position that you're putting yourself in. You understand the dollar amount at risk, you understand the potential for profit, and then you can make a more informed decision of like, hey, I do want to take this trade. The risk to reward ratio makes sense. My position size makes sense. All of it makes sense. And I'm okay with the risk because I find the reward that much more attractive, right? The risk to reward ratio is in my favor. So that's exactly what we're going to be talking about in this video. I haven't made a video like this in quite some time. I'm going to keep it short and sweet. I'm just going to give you one example and let's go ahead and jump right into it. I hope that it earned your thumbs up. Please make sure you subscribe. And if you have any questions whatsoever, all you need to do is comment that down below. So first off, where do you get this little Excel sheet if you don't want to make it yourself? We do have it available for you for free at techbudsolutions.com. So when you go to our homepage on TechBud Solutions, as of right now, you're going to find the economic calendar here. But if you scroll on down, it says Trading Checklist Beginner Bootcamp. You click on that, and then it's actually available for you to download. Not only can you download the checklist, but you can download the risk to reward ratio either for numbers if you have an Apple device or for Excel if you have a non-Apple device. It's pretty much going to download it like this. I color coordinated mine. I don't know if it's going to come color coordinated. But the really cool thing about this is that just like it explains in the checklist, it talks about understanding your risk to reward ratio, how risky is this trade, your position size, and your trade plan. So this pretty much almost checks off 4 of the 7 boxes in your checklist, or the checklist that we created today. So I wanted to use an example, and I want to use like Tesla as an example. You can use it for day trading, you can use it for swing trading, it really doesn't matter. The whole point is for you to only put yourself in positions that you actually understand. Like, how amazing would that be when you choose to take advantage of an opportunity that, okay, I understand that I might potentially lose this, but I'm okay with it because this is my potential reward. So therefore, it shouldn't catch you by a surprise, which I feel like is a big part for beginners. When they see that red number, they're like, oh man, I don't want to sell because I didn't expect to be down that much. And then that kind of encourages a beginner to bag hold. Let me know in the comment section what you think about that. But I want to use Tesla as an example. And again, this is just an example. But the really cool thing about Tesla is that it's a little bit more on the oversold side. Some people view it as a buy. Again, I'm not here to... it doesn't matter what it is that we see it as, but let's just go ahead and plug it into our calculator. Obviously, I don't want to buy this as it's continuously descending, so it's still getting rejected by the EMA line since it's been getting rejected. It's been a strong descending pattern, but if it begins to indicate signs of an uptrend, then I would love to visit the idea of entering when it's actually indicating signs of an uptrend, and that would be right around 188, 190. I rounded up and I added in my calculator 190 per share. I just plugged in 190, and then it puts it in as my entry price. What is my exit price? This is the price target. Where do I plan to sell in a perfect world? Remember, a goal is something to work towards, not something that actually has to be achieved. Buying at 190, do I plan to sell at 200? Again, this is something that you can decide on your own. Is it going to be at the moving average? That's going to be around 231. I chose previous highs. There's a very common resistance range. Again, I'm just aiming for previous patterns, and that was right around 264. So again, I put the price target of right around 260. So you can see my price target there, 260 for Tesla. And then my stop loss, again, if I enter at 190, where do I want to cut losses? Well, I entered because it broke above EMA and it's beginning to indicate signs of an uptrend on this day chart. Now, if it begins to trade below the EMA on this day chart, I want to give it some wiggle room, but not too much, right? So if it does break below the EMA line, at what point do I want to potentially cut losses? Maybe around 185. Again, that's just the number that I decided. You can adjust it accordingly depending on your risk tolerance. 185. So this is telling me that my risk to reward ratio, which is absolutely insane, not many of them are like this, is a 14 risk to reward ratio, meaning that for every 14% of potential profit, I'm risking 1%. I mean, if every risk to reward ratio could be like this, this is an insane edge. But again, we still have to wait for confirmation. Direction has to be favorable. Right now it's trading at 175. So the number would be even more wild. But again, there's no reason to enter a stock that can still continue to sell off. The beautiful thing about this is that we're choosing to wait for confirmation until it breaks above EMA line, and then we can revisit this trade plan. And then again, you can enter your position size. So let's say that I decide to buy, let's say that I decide to buy a total of 100 shares, right? 100 shares of Tesla. That would put my overall position size of right around $19,000. Now, that seems pretty realistic for someone that is investing in something like Tesla. Again, I don't know what it is that you trade with. I don't know, and it doesn't necessarily matter. The whole point of this is that the trade plan makes sense. So with $19,000, I have a potential to make $7,000. And with this kind of risk management of buying at 190 and stop loss at 185, as long as I execute properly, I could potentially lose $500. Now, again, let's say that I size up my position, right? If you guys have ever seen me trade live, you guys know the dollar amount that I trade with. So let's say that I decide to buy 1,000 shares of Tesla at 190. That means that I'm going to have $190,000 invested. I have a potential return in a perfect world of $70,000. And then I could potentially lose $5,000. So right off the bat, I'm like, obviously, when you're planning out your trade, you're always just thinking about the green, but this really puts things into perspective of like, oh wait, do I want to risk $5,000? No, that's too much. I don't want to risk that. For whatever the case might be. Again, you get to decide. You are the final decision maker. You're like, no, I just don't like that. I'm going to go down to 500, and 2,500 is more of an appropriate loss. It's something that I'm more easily able to tolerate. Just like that, right? You just created your trade plan. You understand your risk to reward ratio, and you understand the dollar amount at risk, the dollar amount that you could potentially make in a perfect world, and you have your trade plan. So now it's just executing appropriately and waiting for that proper confirmation. Now, what are some red flags to kind of look out for? A more realistic one would kind of be like NASDAQ. Let's go ahead and go on over to NASDAQ. So obviously NASDAQ is a strong ascending uptrend pattern. NASDAQ is nearly at 52-week highs, but let's say that I wanted to buy here. I wanted to buy at 444 with the potential to sell at 450, right? Because I think that it's going to go back to 449, but right around 450. So from 444, I think that it's potentially going to go, let me go ahead and update this. So from 444, I think that it has the potential to go to 450. And I keep the same stop loss. The stop loss was right around 434, which is right around down here if it breaks below the moving average. At this point, if I enter those numbers, what it's going to tell me is that my risk to reward ratio is 0.60. What the heck? Okay, so let me see this in layman's terms. What exactly does this mean? And this is why I love this, because you don't just look at the risk to reward ratio, but you look at the profit potential and the potential for loss. That means that if I choose to take this trade, if it goes according to plan, I'm able to make $72. Okay, cool. Based off of, putting 5,300 behind the position. But if the trade doesn't go according to plan, I could potentially lose $120. What the heck? Okay, now I understand this. You see kind of how it kind of humanizes what it is that we're doing here? It puts things into perspective like, oh, wow, yes, although it is bullish, the potential for my reward does not outweigh my potential for risk. And because of that, that's not a favorable risk to reward ratio. So I'm going to want something that's going to be a little bit higher. Normally, I aim for a 2-to-1. Meaning that my potential for profit is at least 2 times of what my potential for loss is. So at that point, I'm either going to have to manage my risk more carefully or my entry price. I'm going to have to wait for a more attractive entry price and maybe wait for it to get closer to the moving average. So let's go ahead and do that. Now, instead of buying at 444, I'm going to try to buy, what's the moving average at? 436. Yeah, let's just say 436. Very simple. We just type it in there, 436. Price target still stays the same, and my stop loss can still stay the same, right? I can still stop loss if it breaks below the moving average. But this is the beautiful thing about, again, waiting for an opportunity to present itself. Now my risk to reward ratio is 7. That means 7% upside for every 1% downside. And with the same position size, my dollar for potential profit is $168. My dollar for potential loss is $24. But that means that I have to wait for the opportunity to present itself. That means that I have to be patient. But again, going back to the same thing, the trading checklist, which again, you can all download for free at techbutsolutions.com under this trading checklist. It's available both on Numbers, Excel, and PDF. But I think that Maybe it's just me, but I think one of the biggest things for beginners is that they lack structure, and this just forces you to implement structure behind your trade. Now, of course, just because you implement structure doesn't mean that you're going to have a 100% success rate. The whole point of you managing mitigating risk or setting up that stop loss is because not every trade goes according to plan. Your job is not to avoid risk, your job is to manage it. But this just gets you one step closer to that overall goal and making sure that you only take advantage of quality trades that make sense to you, and also that you have a proper trade plan that you actually understand and acknowledge the risk of, not just thinking about the potential for profit, but always taking into consideration the potential for loss as well. So you guys let me know down in the comment section, is this something that you guys value? And if so, I would love to make more videos like this. And if you have any questions whatsoever, all you need to do is comment down below. I do want to remind you, I trade live every single morning right at market open. And we talk about concepts just like this. So if you think that it would be valuable for you to tune on in every morning to be able to see my entries, my exits, but most importantly, to hear my thought process behind every trade I take, I'd encourage you to take 2 minutes, click that second link in the description down below. And again, it's a 50% off discount with a one-time payment, lifetime access. And if you sign up today, you'll be able to watch me trade live as soon as Monday when the market opens. I appreciate your time. Like always, let's make sure that we're in the year on a green note. Take care, team.